Welcome back to yet another new video from Daytrading. In today's video, I'm going to elaborate on a video I made earlier. This was the $1 million trading strategy. By the way, this video has been watched quite often. And that's not strange because this strategy is namely very good. But today I'm going to make it even better by adding a very professional price action, namely liquidity price action. Don't panic if you haven't seen the other video yet. First I'll go through a small summary, after which I'll go deeper into liquidity. By the way, I do recommend you to watch the previous video as well. Because together with that strategy and the one I'm going to explain today, you can trade professionally and earn a good monthly income. Sit tight because this strategy will change the way you trade forever. As you may know from the previous video, we use two indicators in this strategy. Both are the EMA, or the moving average exponential. In this strategy the settings of the indicator are slightly different though. We are not trading on the 5-minute timeframe, but on the 15-minute timeframe. The parameters of the EMA will therefore have to be set a bit higher. If I go to the settings of the EMA, you can see that the first one has a length of 12, and is based on the 4 hours timeframe. With the other strategy it was based on the 1 hour timeframe. If I go to the settings of the other EMA, you will see that it has a length of 26, and is also fixed on the 4 hour timeframe. As promised, I will first do a quick summary of the previous video I made about this strategy. The idea behind this strategy is that you can easily spot the trend by means of the movements of the EMA. We can easily see the direction of the price if we look at the EMA lines. Is the red line moving above the price? Then the price is moving in a falling market. And is the red line moving below the price? Then the price is moving in a rising market. Once you know whether the price is moving in a rising or falling market, the next rule was that the price must rise or fall over the red line. In this example, we'll take a look at a sell position. So in this case the price must rise over the red line. This is because as soon as the price moves above the red line, it moves into a sell territory. It is a favorable time to sell the cryptocurrency or a forex pair at a good price. Once the price rises above the red line, we still have to pay attention to two things. The first rule is that we want to see a resistance level. We see this here on the price. A resistance level also indicates a certain selling pressure. Secondly, we need to pay attention to the time in which it happens that the price crosses the red line. This is because we only trade this strategy between certain trading times. These times are from 8 a.m. to 12 a.m., and from 15 p.m. to 1800 hours p.m. This is European time. So if you are watching the video from another country, you need to convert the times back to your local time. These two time slots are extremely important because between these two times the European and American stock exchanges open. As soon as a stock exchange opens, there is always a lot of volatility on a price, which usually causes the price to make bigger movements than outside these times. As soon as the price lands on a resistance level between these times and above the red line, it's just a matter of waiting until the price clearly starts to drop again. At that moment we know that the opening of an exchange will result in large selling orders. So at that moment we also open a selling position and trade with the big money. The rules of this summary also apply to the liquidity strategy I'm about to explain. The liquidity strategy in fact works the same as far as the basic rules are concerned, except that we are waiting for more certainty. As soon as large investors first try to grab liquidity, we know with almost 100% certainty that a big drop in price is coming. How this works I will now explain to you step by step. Before I start explaining this liquidity strategy, it's of course useful to know where you'll be able to open buy and sell positions. If you're wondering which platform I trade on daily, take a look at the following. I myself always trade on the exchange Bybit. I do this because it is a clear and professional crypto platform on which you can easily place buy and sell positions. In addition, I always use levers to make profits faster. With levers, you can increase your positions up to 100 times faster. However, you can also lose 100 times as fast. So use this feature only if you are executing a good strategy. I also use this 4-price layout to easily keep an eye on multiple quotes. Hugely useful if you are a day trader. In short, Bybit is a good and reliable crypto exchange to trade on. Do you also want to trade on this exchange? Then you are currently in luck because Bybit is giving away a one-time deposit bonus up to $3,000. You can visit Bybit via the link in the description. Let's quickly return to the strategy. First, it is important that you know how liquidity works. Therefore, I will first give you some explanation. Liquidity trading is an important and also professional way of trading. In short, liquidity spots on a price are actually spots where most breakouts and orders take place. Let's take a look at the following figure. Here we see an upward price movement and see that below it is a trend line. Most traders will buy their position once the price touches this trend line. Then they put their stop loss below the trend line at about this spot. So these spots are sell-side liquidity areas. This is where a lot of orders are ready to go. The other way around works the same way. In a falling market, sellers place their sell positions as soon as the price touches the trend line. Then they place their stop loss above this trend line. The areas above these trend lines are thus buy-side liquidity areas. The liquidity areas are thus areas on the price where many orders are ready. So when the price enters these areas, it will often be the case that the price can make big moves such as a breakout. Liquidity is not only found with trend lines. Liquidity areas are also found at support and resistance levels. As you can see on the images, you see here a support and resistance level. On both levels, buyers and sellers place their positions and set their stop loss above or below the support level. This means that below the support level sell-side liquidity occurs, and above the resistance level buy-side liquidity occurs. Now that you know what liquidity areas on the price are, we will look at liquidity grabs. A liquidity grab means that liquidity is taken. So a breakout takes place. If we go back to the trendline picture, we can speak of a liquidity grab if the price initially makes a breakout towards the liquidity. So many stop losses are hit. This means that many people lose money at this point. But now comes the most important thing of all. A liquidity grab means that the price still rises after all stop losses have been hit. The price crosses the trend line again and rises further upwards while most traders don't have a position open anymore. As a trader, you'll probably recognize this as well. After your stop loss has been hit, the price still rises, and now you don't make any profit anymore because your position has been closed. This is a phenomenon which is manipulated by high net worth traders. As you know, more than 90% of all traders lose money in the market. The high net worth traders try to do everything they can to make you belong to that 90%. So they do this by making the price move to your stop loss. The price then rises and the high net worth traders now make your money. I understand that this is quite difficult to understand. It's also not just something. Therefore, I will now show you an example on the price itself. Here we see that the price is moving in a rising trend. Next, we see that the price is creating a trend line. Every time the price hits this trend line, the price rises a little bit. But the last time, the price falls through the trend line. And as I just explained, there are many stop losses in this area. Now that all the stop losses have been hit, the price still rises up again. So this means that there has been a liquidity grab. Now that most traders have closed their positions, the price is still rising, and the big traders are making a lot of money. So the idea with this strategy is that you do exactly the opposite of the rest. You know that 90% of all traders lose money. So it's not useful to do the same as them. In a downtrend it works exactly the same, only now we're looking at resistances. Here we see a clear trend line on which the price gets resistance every time. You know that all traders have their stop losses above this resistance. So as soon as the price breaks through this trend line, all stop losses are hit, and most traders think that a breakout is taking place, and they even place buy positions. But the smart traders like you and me are still waiting. After all, we know that a liquidity grab could take place. And as we can see, it is taking place. The price drops below the trend line again, and that is the moment we open our sell positions. This is because we know that the high-powered traders do the same. As with the strategy 1 explained at the beginning of this video, I now place my stop loss above the last high and target my take profit towards a risk-reward ratio of 3. As I mentioned at the beginning, this method gives an extra security for opening buy and sell positions. Namely, here we see an example of a sell position how you would do it in the normal way. You learned this in the other strategy. We see that the price is rising above the red EMA. So we can look for selling positions. We do this the normal way by looking for a resistance level. We see that here on the price. So as soon as the price clearly moves away from this, we can open a sell position. Because as we see, this price movement also falls between our trading hours. But if we look a little deeper, we can also see a trend line. The trend line is broken, and then liquidity is grabbed. Then the price drops below the trend line again, so we know that traders with large capital open selling positions. So we too open a sell position here. I again place my stop loss above the last high, and I place my take profit target 3 times as high. With our sell position we now earn when the market falls. And that happens. As I also made clear to him in my previous video about this strategy, I have made over $1 million by trading with resistances and support levels. As a trader, it's always important to keep innovating and to see what can be improved. So now I trade mainly with liquidity grabs, but also keep looking at resistances and support levels. You can easily use both strategies at the same time because you use the same indicators. Don't you want to keep an eye on the prices yourself? Then you can use our premium subscription. As a premium member, I will tell you when I have found a buy or sell position. The only thing you have to do is open the position on Bybit and wait for profits. We work with a no profit is money back guarantee. More information can be found on our website. I want to thank you for watching, and I look forward to seeing you next week.